Hi, and welcome to this episode of Financial Planning Innovation. It's my pleasure to have on the line Lex Sokolin. He's the global fintech co-head for Consensus, and he works on blockchain projects. Thanks for joining us today.
Happy to be here. How's it going?
It's going well. I'm really excited to have you on the line. I know you're an influencer on LinkedIn, and you write a lot of articles. So hearing your insight directly from the source is really amazing. Tell me a little bit about how you got into this space where you're doing blockchain now, but I know originally you were doing robo advice.
Sure. So I started my career on Wall Street, I'll admit, of all places at Lehman Brothers. Uh, I was given permission early to try and be an entrepreneur. That sort of liberated me from um, the traditional path. And so in early 2009, I started a B2C robo advisor called Nestec Wealth. And then that turned into a digital wealth platform called Advisor Engine, where some of the folks in the audience might use that for portfolio management or rebalancing or CRM, if you know about Juncture. And so I have an affection for the planning profession and the digital wealth space. And I spent a lot of time thinking about personal finance and what's happening with consumer apps and what's happening to how people receive their financial advice. Um, but I think in 2020, the ground has shifted. So, whereas 10 years ago, there was this real question of, will people use the web, or will they use their phones, or will they use technology and automated sort of flows for delivering advice? I think hopefully that is a lot less controversial today. With folks like Stash raising $100 million and Revolut and Robinhood and all of those in the hundreds of millions in venture funding. And so, what's interesting to me as somebody who really tries to follow the edge of the frontier for financial services is what's next. And through the work I've done in terms of research and working with founders, I think what's next is much less about the consumer experience. We know what the answer is there, and is much more about the manufacturing experience. So, how do you make the thing that people put their money into? How do you make the funds that they invest in? How do you make the bank account where their money sits? How do you make the payment rails on which their money travels? How do you make the insurance product and the lending product that they use in their overall financial picture? And the very vanguard of that is blockchain based infrastructure. And so today I think that's what's going to change a lot of the products that people hold in the future.
Okay. A lot of advisors probably in the audience, they're concerned about robo advice. I think that was maybe a few years ago, but where do you think the robo advisor begins and the real advisor and where the human relationship really matters? Where's the value add for both sides of that?
Oh boy, the it's not a qu- it's a qu- the qu- that question is just an expression of sort of philosophy, right? It's not really. I'm not point. It's not your point of view, but when people ask that question, it's really it's a way to say yes or no rather
Mhm.
than get to the answer. I think you can ask yourself related questions like, where does my phone start and where do I start, and where does my email start and where does my conversation start? Like, it's
Mhm.
almost like it doesn't matter, right? If you're in a world where 50 million Americans are using digital services to connect to their banks and their apps, it doesn't matter if it's portfolio management or account opening or if it's planning or if it's the trade. Like, it really doesn't. I mean, the answer
Mhm.
is over the next 10 to 20 years, and certainly already today, people increasingly live in their virtual towns, not in their physical towns. And with COVID, you only live in your virtual town, and the virtual town is where the technology is. And so I think conversations like ours um, are in large part what I think the planning professions like the emotional labor of guiding somebody through a complex situation face to face. But for sure, you're going to be embedded, or you already are embedded in a very tech forward dashboard. um, the best thing about robo advice is that it has become non-controversial, meaning that every financial incumbent has some robo advice interface, as well as the long tail, right? So through digital wealth platforms, you can private label client portals and onboarding and all this stuff. Um, and so there's only one path for that direction, which is more technology, and then the human interaction is just boiled down to the human relationship. in my view.
Right, and the human relationship, still matters obviously for clients to have a good experience, to have trust.
Yeah.
At the end of the day, they can trust certainly the robo advice as they get more comfortable with it. And I guess we'll see the role of what that human advisor plays in conjunction with the technology. I know now you're kind of moving from robo advice more to blockchain, this concept of blockchain. Can you tell us about that transition and why you made that transition?
Yeah, so I think where is the value created in innovation and fintech? And I don't think there is a ton more value to really create in the user experience. It's that is just catching up. But I think there's a ton of overfunded large fintech footprints out there. And so for me, the value to be created it resides uh, what is the thing that you're giving to your client. What are they holding? What's the cost of carrying that thing? And not just in terms of like what's the interest rate on it or what's the opportunity cost, but like um, there's a lot of ugliness in terms of like custody and the portfolio management systems and the trading that underlies that. Or when you send a transaction through Apple Pay, I mean, if you saw the sort of like diagram that shows you how the thing works. It's more complicated than a space shuttle. I mean, it's massively advanced. And so, for me, what's interesting is reimagining financial infrastructure. Full stop. So imagine that your payments rails provider, somebody like a WorldPay or a Visa, was also your asset management provider. So somebody like Envestnet was also your core banking platform provider, somebody like Jack Henry or Fiserv. Was also your lending provider, somebody like Refinitiv or Finastra, right? Like all of these multi-billion-dollar companies that are just there to lay the pipes. And what I see in blockchain is that financial infrastructure actually already existing. Now, there are ways in which it's clunky and it doesn't quite process transactions fast enough, and lots of different sort of concepts come out of it that are challenging to people. But that is the promise of a programmable blockchain where you have a common set of rails on which any type of value, no matter what the asset class is, can travel between people, between organizations, borderless, all of that good stuff. And the corollaries to that problem solve a whole ton of issues around the cost of providing financial services to people of low income or unbanked or underbanked, et cetera, et cetera.
So I'm going to take a step back, and I understand blockchain from a 30,000 foot view, Bitcoin and how it creates a ledger. But then when you apply that to the financial services world, that becomes a little bit murkier for me. So for the audience, I'm sure a lot of them are in the same position I am. Can you kind of just explain what blockchain is within financial services, at a core level? And then I think all of those other, I think, derivatives of it, right, what results from it, which you kind of described, will become a
Yeah,
little bit clearer.
sure. So an impossible task. I think there are two. There, I can only give. It's a rabbit hole, and the best way to learn is just to do it and jump around the web. But I would advise people to separate out two things. Number one is the asset class, and number two is the operating infrastructure. And I'm sure you understand the difference between those two things, right? Like if you think about a stock, there is the exposure to the Apple stock, and then there's the where does the stock actually certificate sit, and how do you do the trades, and what is an exchange, and what's liquidity? And
Right.
so those two things are very different, and you can do that for essentially any financial services sector. Um, Bitcoin's easy to understand. It's some sort of store of value. It's just digital, um, and and you can think of it as an asset class of this sort of like digital gold bit. That's fine. I think the more intuitive answer around what's cool about it is think about objects in the physical world. So in the physical world, if you have an ounce of gold, it is scarce. There's
Mhm.
only one of it, and you can hold it, and there it is. And if I have it, you don't have it. And if I give it to you, then I don't have it. Um, Now, if you go into the digital world in the year 2002, and you've just burnt an MP3 from a CD, and then I give you the MP3, I have it and you have it. So there's no scarcity. There's nothing unique about that file. It's just endless copies of everything, and therefore the price of everything goes to zero because supply is infinite. Right? There's no value, and you can't really transact using all these copies. And so what blockchains do is they take digital objects, but they give them the quality of scarcity, like that bar of gold. So if I have a Bitcoin and I give it to you, loosely speaking, I don't have it anymore and you do. And giving that attribute to a digital object is very special, because if you give it to a Bitcoin, you can also give it to a stock or an ETF or a piece of art or a piece of real estate. Um, Anything you can really think about tokenizing, which is the word that applies to that, you can turn it into this scarce digital object that we can transact around and have just a human economy around, and that's really interesting and functional, and that immediately translates to being able to think about, portfolio management systems that are running around tokens, or manager selection platforms that are running around tokens, and that are just designed in this different way.
Okay. And so when you say the asset classes, you're talking about the physical store of value. When you're talking about the operations, you're talking more about the tokens and access to the systems. Is that the concept?
Yeah, so the asset class is like, should I buy Bitcoin? Should I buy Ether? What role does it have in my portfolio? Maybe it's an alternative asset class, and I put 2% in there, and then my Sharpe ratio for the investment's better across a fully diversified asset allocation. And so
Mhm.
that's one way to think about it. And for that, you might say, well, I want the Bitcoin ETF. Where's that? I don't want to put my clients into it until I have some sort of vehicle. That's a very different set of thinking than saying, um, not only can Bitcoin travel on blockchain rails, but the US dollar can travel on blockchain rails, and Apple stock can travel on blockchain rails. So for example, with Consensus, we had a client that was a $300 million real estate fund, right? So not an advisor, not a wealth manager, but a manufacturer, somebody that makes the fund and makes the investments. And so they had a fund structure, and what they did is they took a portion of that fund and turned bits of it into um, basically fractional tokens. So some portion of those fund interests could be held by one person, 10 people, 1,000 people, and so on. And then because it's on blockchains, you can immediately exchange it or package it up into portfolios, or any of the things that we're used to doing in the sort of traditional world, but are much harder, much more difficult. Those things come naturally for tokenized infrastructure.
I see. And you kind of good. That's a great example to help, I think, illustrate the concept. Anything else, like in terms of clients you've worked with, come to mind where you think the frontier is of using blockchain from a business application perspective? And I
Yeah.
know the companies out there are probably interested to hear about, where is it really practical versus where is it kind of theoretically useful but not really being put into practice.
Sure. So I think financial planners and wealth managers are in a weird spot, because their clients, consumers, have already engaged with all of this technology. Like, they don't care to wait for the industry to catch up. They just go on Coinbase and they buy it, and it's done, right? So they're holding it no matter what. I think Coinbase has uh, 30 million accounts and over 10 billion in assets. So it's a fatty. Um, at the same time, the traditional capital markets industry, which is subsequent to wealth managers, hasn't fully incorporated this stuff yet. So if you're waiting for an ETF or some package, or you're waiting for your custodian to come and say, listen, this is how you do it, you're going to be waiting for the next 5 years. And so you're just going to miss the boat. Um, and so when you look at how people are applying this technology, you really have to take the lens of, what are you trying to do? And if you're trying to create exposure for your clients, then it's figuring out, how do you create exposure, which investment vehicles to pick that give you exposure to Bitcoin or to Ethereum, and there's certain trust packages and things of that nature. What I work on is much more at the plumbing level. Like, I'm much more interested in transforming capital markets from the inside, and so um, the examples I would give you there are things like, uh, you can have multiple banks or multiple large financial services companies that share a single data storage. So there's data that's only in one place. It's like a Google sheet that they all control. And so you can imagine things like reconciliation and trading breaks and pricing breaks and performance reporting breaks going away by definition because you're working from the same data source. So that's one example.
Very cool. Well, I appreciate you taking the time today. I'd love to have you in future episodes as well. Obviously you have a lot of ideas, and the company you're working for is being very innovative. So again, thanks for your time.
Happy to. My pleasure.